welcome to the Impact Show with your host Samuel Ikan Kinwin. Guys, I hope you are ready for tonight's show. Tonight's show is going to be on fire. We've got so much going on tonight's show, so I hope you're looking forward to it. Just before we get really into tonight's show, before we deep dive into tonight's show, look at me, I'm getting twisted with my tongue already. Just with the anticipation of tonight's show. Tonight, we're going to have a guest. We have Paul Roberts, accountant, mortgage broker, property investor, who's going to be also sharing the platform with us tonight. So it's going to be an absolutely amazing show tonight. Now, first and foremost, let me just say this to you guys, all right? If you are looking forward to tonight's show, just write in the chat. All right, let us know in the chat. Say hi, let us know that you're joining us, let us know that you're looking forward to tonight's show. If you're looking forward to tonight's show, we got so much prepared for you guys for tonight's show, so I really do hope you're looking forward to it, because I am definitely looking forward to tonight's show, to enjoy the show with you. Now, I'm going to go through in a moment a whole bunch of things, a disclaimer and all of those things, all the red tape for tonight's show. But what I really want to do is I want you guys to get value from tonight's show, okay? And the way you're going to get value from tonight's show is when you guys engage and participate and let us know that you also are ready for tonight's show. So I've got Yogesh in the chat. He said already, looking forward to the special guest. We're going to have Paul Roberts on tonight, so it's going to be a really interesting show tonight. This is not the first time that I've interviewed Paul. In that sense, I'll share that with you as well. When I used to host the Canary Wolf Pin, Paul was one of the guests I had on a panel, and side by side with that, Paul was also a speaker that I had invited to come and speak on one of our events. And that's because Paul has a wealth of knowledge. He has a wealth of knowledge as it pertains to the property world. So guys, I'm looking extremely forward to tonight's show, and I hope that you guys are also. Now, tonight's going to be slightly different. I'm going to share with you a little bit of the framework so you guys have a clear understanding of how it's going to work a little bit different. Instead of the phone line, we're still going to get you. We're still going to have you audibly sharing with us kind of your questions. So there's still going to be an opportunity in that sense, but it's going to be slightly a bit different. And when I say slightly a bit different, I just mean in the sense that rather than, rather than have the calls coming through on the telephone line, we're going to actually have you join us through means of a Skype call. So that will be, it's a little bit of a different setup, but I'll send the link when it's that time for you guys to be a part of that. So guys, like I said, I really do hope that you guys are looking forward to tonight's show. Now, without further ado, let me jump into the value that we got for you guys, so we do not wait any longer. First and foremost, let me welcome you to the show. If you're brand new to this show, if this is the first time you've been on the Impact Property Show, I want you to just write in the comments new, NEW, 3 letters, NEW, send. All right, as long as you write NEW and send, you will be on the show with us tonight. Side by side with that, this is episode 33. For those of you who do not know what we're doing here, this is episode 33 of the Impact Show. And what we basically do on the Impact Show, for those of you who don't know, okay, I'm going to make it very simple for you guys to have an understanding. When the pandemic hit, when the lockdown hit, we had a whole bunch of people basically sharing that they were kind of stuck in terms of their property business. They had no idea what to do, how to do it, etc. So because of that, we said, well, look, how can we help these people to move forward in their property journey? How can we actually push them forward? And the answer to us was fairly simple. We needed to support them through means of giving them answers to the biggest questions that they had. And many people had these questions. So for us, the key was, okay, what kind of answers could we give and how could we help them with those specific answers to those questions? So what we said, the team said, you know what, Samuel, let's get together and actually go live. Let's create a live show where we can on a regular basis go live in order to help the people that needed the biggest help. And this is exactly what we did. We had our coaching clients, we had our students, we had a whole myriad of people who decided to participate by jumping on the show, okay? And we got some regulars who are inside of the chat. We got London's happiest bus driver who's jumped in. He said he's new. Welcome to the show. It's great to have you on. He's also mentioned that he's looking forward to tonight's show. He's so grateful that he looks okay, he's so grateful that he looked at the Impossible WhatsApp group and saw the invitation to tonight's group. So thank you and welcome to joining the show. This show is going to be jam-packed. We got one of my favorite people in property who's on tonight's show. So you're going to have a guest. You're going to have not just myself, but someone else, another expert in property, in order to share and ask your questions. We got Yogesh, who playfully says also that he is new. Yogesh is one of our regular viewers. So Yogesh, again, welcome. Great to have you on as always. It's always a great pleasure to have you on, not only because of the questions you ask and the value that you take out of the show, but also because you are an engager in the chat. You allow people in the comments to understand that there's more than just myself being here and the team that are here to support the show, but there's also you guys who are there to connect with other people and build your own property journeys as well. So like I said, don't forget to say hi. Let us know in the chat. If you're brand new, just let us know in the chat that you're watching. Let us know that you're tuned in and that you are ready to go. Now, very shortly, Paul Roberts will be joining me on the call. He's going to be jumping straight in. But before he does join me, what I want to do is I just want to go through a few things that we usually do on the show. I've shared with you guys how we ended up having this show. And, you know, you guys are buzzing inside of the chat, which is great. I'm great to see people who are new letting me know that they're new. Great to see the regulars coming in and obviously sharing as well. First and foremost, guys, like I've said already, I'm going to say it again. Don't forget to say hi in the chat. If you're brand new, okay, if you're just coming to this show, if you're just being here for the first time, don't forget to say hi, okay? We want to engage with you and we want you to engage with us. So do not forget to say hi. It's a great pleasure for us to have you guys on. So again, you know, participate with us, connect with us, and let us know what you're looking for out of tonight's show as well, because that's going to be important to us too. Now, side by side with all of that, okay? Like, comment, and share the video. Okay, and I'm saying that because that's going to be of value to you. Your community is going to know what you're doing in property as you like, comment, and subscribe. Okay, so be a part of what we're doing and subscribe. Now, obviously, I've mentioned already, going to share it again. Tonight's guest, okay, is a property investor, okay? Side by side with that is a qualified accountant. Side by side with that is an active mortgage broker, insurance specialist, and also a property developer, all in the form of Paul Roberts. So when we put on Paul in about a minute or two, you guys are going to be able to get a myriad of wealth in terms of the insights Paul can share. And side by side, obviously, we're here to answer your questions, guys. So feel free to throw the questions. Whether you got questions, put them in the chat. You know, call in. We're going to give you the link to call in a moment. Call in. Let us know what you're looking to get out of your property journey and the questions you have. So 2 more things before I let Paul on. First thing, disclaimer, okay? All information provided and results given are exemplary. Each person's results may vary or differ. Results are based on consistent implementation of the strategies we're talking about. And we advise that you always seek legal and financial advice from a qualified professional. And one of the great things about our guest tonight is he's a qualified professional. So Paul's going to be able to help you in that remit as well. Now, again, I just want to share my appreciation to every single person who's watching and those who will come on and be watching, whether it's live or on the replay, because we just passed 300 subscribers, okay? And guys, let me say this, that is not me. That's down to you. So I want to say a great big thank you to every single person who's hit the subscribe button, who's hit like, who's shared the videos, who's participated in what we're doing. All of our subscribers and comments on how to improve the show over the weeks has been amazing. And as a result, we now have our first ever guest speaker, which is a direct byproduct of you guys, of the guests saying that this would help make the show better. So without further ado, I think I've spoken enough, you know, and you guys know me. Rather than speaking, I love to give the floor to others and share the platform. So let's do that. Let me see if I can get Paul on right now without further ado, so you guys can know what we got ready for you. All right, so Mr. Paul Roberts.
I was a bit worried about the technology there, but
we should be good. We should be good with the tech, Paul. Let me check one thing, guys. Let me know in the chat, okay? And this is just to make it fair on our viewers. Let me know in the chat if you guys can hear Paul, okay? Let me know if you can hear Paul. That's all I want to know. If you can hear Paul, because if you can hear Paul, then we are ready to go. We're ready to rumble, okay? We've got everything in place. We're ready for you guys. We're ready to bring you guys in as well. So can you hear Paul? And look, to get us started, I'm going to ask you a question, Paul. I'm going to ask you the first question just to open it up. And again, these lot can let us know in the chat if they can hear you, etc. And that first question is, give us an introduction for the viewers so they can know more from yourself about who you are and what you do in property.
Thank you, Samuel. First of all, thanks for inviting me on. I always like to talk, especially to you.
Welcome.
So as you as you mentioned in the introduction, I qualified as an accountant many years ago. Worked in the city, so I'm a qualified chartered accountant. I own a financial services business and work as a financial advisor. We used to say mortgage broker, but we're so much more than that now. And I've been investing in property since the late 90s in all of its various guises and forms, and I've been an advisor for close on 20 years also. So as you rightly point out, I'm in a unique position to understand not only a good commercial investment or property investment, or how to buy or where to buy, how to add value, but also how to finance that and the tax implications of it.
Powerful.
I'm picking up an echo. Am I clear on your
Say
side?
that again, Paul.
I'm picking up an echo. Am I clear
You
on
are
your side?
100% clear on my side. And I've been told by Mrs. I Can Win, we can see and hear Paul. So everybody's locked in. Everybody's ready to go. This is absolutely amazing. So, Paul, you were mentioning some, in my opinion anyway, some powerful things, okay? First and foremost, investing from the 90s, side by side with that, having the financial background in terms of your qualifications, being able to understand the market, and also, like you mentioned at the end, the tax implications as well, which is something a lot of people do not do. A lot of people, especially those who are really bullish in terms of their property journey, what they do is they just go headstrong and just say, look, I want to buy. But they don't actually think, what's going to happen tomorrow? What's going to be the implications of what I'm actually doing? What are the implications of my actions? So with all of that in mind, I'm going to ask you this question, Paul. So it's a bit of a red herring, but there's a lot going on in the property scene. So let me ask you this question in tandem and in keeping with the property scene and why we started the show and all of that. The question is, what do you make of the current climate in terms of property? Because, it's 2020 coming to the tail end. A lot of people entered this year thinking this is going to be their year. And now we're kind of somewhere else for many people. And there's some people who I know I've been in contact with who have kept the baseball cap on their head, know exactly what they're doing, use this kind of environment and have navigated it. So what do you see? What do you make of the current landscape in terms of property?
It's interesting. So we've got an old adage in the property game is you buy when there's blood on the streets, and excuse the brutalness of that statement. The current market, there's a lot of fear. There's a lot of fear mongering going around alongside the market's going to crash. People are losing their jobs, so there is going to be some sort of impact on the market. But the support that's given to the market, I mean, I've lived through a couple of recessions and bounced. Since 2008 for me wasn't really a full-blown recession like we're expecting now. But the market, as I see it now, is one of opportunity. It's one of those once-in-a-generation opportunities to capitalize on the market. Whether the market falls or doesn't fall, now is a very good time to get involved and to be looking to get in.
I like that, Paul, and that's very different, Paul. So I'm gonna harp on that for a minute or two. You said whether the market rises or falls, now is a good time to actually get engaged, and now is a good time to do stuff. Now, the thing that's interesting about that is pre-March, when we started this show, I was talking about the fact that a lot of things are going to happen, which are already indicated through means of, the macroeconomics. And because these things are going to happen, now is the time to take advantage. We got a webinar that we've been running every single Monday, sharing with people how to take advantage in the current climate. That's because I strongly believe exactly what you just said. But I don't find many people saying that. So this is why I want you to elaborate for me on that. What do you mean by whether the market rises or whether the market falls? Now is actually maybe a good time to get engaged in the market. What's your thoughts on that?
So there's fear. There's fear in the market right now. So some people will take deals and they will, like, buying is an emotional thing. Buying or selling is very much an emotional judgment. So when people think the market's going to fall, they might get out. With all of the things that we've had built up over the years, increased legislation and regulation for landlords, the tax changes, Brexit, just when we thought we was over the Brexit hurdle and we were going to see a good market this year, we got hit with COVID.
That's right.
So there's a lot of fear in the market, which means there's opportunity. At the same time, that fear is well founded, because there will be job losses and the economy has to go through a change. However, the amount of money that the government has printed and flooded into the economy has to come out in the wash.
Wow.
Now, 2008, when we had the credit crunch, which wasn't really a recession, that wasn't a fully blown full economic recession, that was more in the financial industry and the banks were lending. It was a liquidity crisis. Nobody knew who was holding all of the bad debt, so they didn't want to lend to one another. The government then put about 200 billion, I think 150 to 200 billion into the economy. And if you bought in 2009, you would have seen some of the best growth from 2009 and
2012 and up. Yep, that's right.
Yeah, that's so. I'm speaking from my own experience. In 2008, I done a deal, and that's it. I'm stepping out of this thing because I was like, this market's gonna dip. You know, I came out. I came out of the recession of the late 80s and the early 90s, and I benefited from that. So I was expecting a similar sort of response in 2008 when I expected the market to dip down. So I sat on the sidelines, but it didn't really fall. What happened is it stagnated. Some people had to sell, but they cut rates and made it affordable, so there wasn't as many repossessions. And with the money that they flooded in, the market took off 11, 12 until now. So we've got a similar situation. I see it as similar. Although the market does look pretty much overvalued, this is what I mean, whether it falls or it doesn't, the amount of money that they pumped into the economy compared to what they did in 2008 is, I hate using this word unprecedented, it's been thrown around so much this year, but the amount of money that they put in is double, maybe triple what they did in 2008.
Wow.
And that has to come out in the wash in some shape or form in an increase in asset prices and inflation.
Powerful. So, you know, I've got this slogan that I was taught when I was 19 years old by a coach, and that is, the one thing we learn from history is we do not learn from history. And effectively, in a nutshell, what I take from what you're saying, Paul, to the viewers and to the people who are tuning in, is that what they need to understand is, historically, we've already seen what potentially is going to play out. And what that is when these economic crashes come, they generally tend to create great opportunities for people who are not buying into the fear, or the fear mongering, if I use that, because again, we're on episode 33. A number of our previous episodes, we've spoke about the fear that the tabloids and the media are basically pushing. But what you're basically saying is, just look at history. Just look at every other time we've had some kind of a crash, and recognize from that historical information, data, and in your case, experience, that that's actually a great time to set yourself up to win.
Absolutely.
Powerful.
Absolutely. And if you look at house prices from 1975 to 1995, you'll see the same 700 in London anyway. You'll see the same sort of 700% increase in prices.
Wow.
Over that period.
Wow.
And from 95 to 2015 or whatever, or the 20-year period we're in now, we're seeing the same growth. So the economic cycle comes in booms and busts, and we always will. It's part and parcel of capitalist economics. Is how it works.
That is powerful.
So the smart money starts to go in when there's fear.
That's powerful. And guys, look, I'm just going to reiterate what Paul's just said. That last adage or slogan that Paul's added, the smart money goes in when there is fear. The smart money goes in when there's fear. And I've just commented in the actual video, in the YouTube, your previous comment, which I thought was extremely powerful. The old adage, you buy when there is blood on the streets. And you know what? This is the thing that many people, I think, don't understand, because what happens is many people wake up in the morning and say, oh, today I'm going to be a property investor. You know, they've been working their jobs for X amount of years. They've got their salaries for X amount of years, and they know they want more. So the question is, how do I get more? And because they want more, they want to go into stuff like property, cryptocurrency, stock share investing. And when they choose things like property, again, like I was saying earlier, sometimes they don't think about the tax implications down the road. They don't think about how they set up their business and company, etc. But I think one of the things they really don't think about is exactly what you've touched on, Paul, which is the historical data. What does history say to us about when is the best time and the best way to win in this market? So I think that is extremely powerful. So Paul, again, thank you ever so much for that. What I want to do is I want to ask you another question, and straight after this question, we're going to open up the call. We're going to open up the lines for people to call in. We've got questions coming through already in the chat. So guys, every single person who's got any questions, if it's a mortgage related question, if it's an insurance product related question, if it's a question around the current market, the economy, etc., let us know, guys. If you've got questions about investing, let us know. Paul has been investing, as he said, since the 90s. Okay, we've got a lot of experience on this call right now, so guys, please take advantage of this opportunity. I guess the question I've got for you now is, how have you navigated your property affairs in this period, yourself personally? Like in this current period, how have you kind of shifted things in your property business in order to kind of be more comfortable, afloat, or to excel? Like, I don't know what approach you've taken. I know people like a good friend of mine, Billy Tariff. He's again a big investor across the UK. One of the things Billy said to me a couple of months ago is he's really kind of what do they call it, battening the hatchets. He's kind of keeping safe right now because he's got a very, very big business. A lot of what he does is development, and obviously everyone who does development knows that's a lot of money going out until the project's finished. So in Billy's world, what he was doing at the time, probably April, May of this year, he was really just making sure that everything is in place for him to be able to pounce at a later time, and he wasn't really getting out and active at that time. But what about yourself, Paul? What are you doing? What have you done throughout this climate to navigate your property affairs in this period?
So I had, I've got a bit of a diversified portfolio up and down the country doing different bits. So I was running some service accommodation, some of my properties in that area. But clearly with the lockdown and no one traveling, I quickly kind of readjusted all of that, and I started taking DSS tenants, which I haven't taken for years, since about 2007 when they started deciding the government was going to pay tenants our money rather than paying us directly, even though you can get around that now and do it straight away. But initially, I started taking DSS tenants a long time ago. But recently, because of what's happening in the job market, everybody thinks having loads of properties and tenants is a good thing. But if they're in the hospitality sector right now and they're not working or they've been furloughed, they're about to lose their job and they're sitting in their properties. Also, the tenant, no evictions. You could suddenly find yourself not receiving any rental income. So I adjusted by switching my tenant types. Like, if anyone's to have money right now, even though they're plucking it out of the air, it's the government. So it's the tenants and a young lady who's got 2 kids and on housing benefit and universal credit. All of a sudden looks like an attractive proposition. Right. So what I did is I shut down some of my service. It wasn't that way, but I definitely shut down the service accommodation and I went for normal AST rental. So rather than making the super profits in service accommodation, like Billy, as you said, I back down the hatches and make sure I can survive on my own base. And you know navigate the waters while they're choppy by battening down the hatches. So that's certainly what I've done through this year. I've also taken the opportunity. So since June, despite all the fear mongering, because nobody could get out and look at property for 3 months between March, April, May, when the market reopened in June, we've actually seen prices rise. So I've taken the opportunity to sell into this market, sell into the hype, because there is still a lot of demand out there. House prices were going up. Estate agents have been, excuse the phrase, but having it away with people and getting more than asking prices. So if on the one hand there's fear, but on the other hand there's a lot of hype and demand to get into the market. And, at certain levels in certain areas, I've been capitalizing on that and streamlining what I've got to boost offers to take advantage when I think the real crunch will start to happen next year.
That's really powerful, Paul. I think, you know, I think so many people fail to realize that there should always be a staggered approach to strategy. And again, just like Billy's mentioned, you've now mentioned the same thing. The staggered approach is, well, now's actually the time to get involved. But over the last couple of months, whilst things were taking place, I'm identifying that these agents are trying to take advantage. I'm identifying that these agents are trying to have people and say to people, look, with this current market, this is what it's going to cost you. And people are falling into this and people are buying into this. And for me, one of the things which I think was sad, but again, it is what it is. I knew it was going to happen, and when it happened, I was just laughing because it happened. And that's effectively the stamp duty holidays and things like that, which opened the door to the novice investors to allow the estate agents to sell these ideas, to say to these people, this is what you need to do in order to sort yourself out. This is what you need to do in order to get a property. You have to buy at this price. You have to pay above the value of things. And the thing is, if people were wiser, what would happen is they'd say, well, look, I've got an existing portfolio. Let me make sure that that all makes sense. Like you said, the hospitality aspects, maybe I've got to cut them off, trim them up, because, for example, they're not going to survive in this kind of climate. But then I start shifting into, okay, what else do I need to do to basically increase my revenue? Yes, I might not be making hospitality money, but I can make some safe revenue by putting the right things in place. So I think that's a really great approach that you've taken. And I think more people need to utilize that kind of staggered approach. Okay, let me clean up in-house before I start attacking to build the house more. So again, extremely powerful. What I'm going to do now, Paul, I'm going to open it up. I'm going to open up the lines for people to let us know what they're saying. But side by side with that, I've also put the chat on screen so we can basically go through a few of the chat questions. Now, guys, for those of you who want to be a part of tonight's show, for those of you who've got specific questions, etc., etc., I'm going to put on the screen right now a link for you guys to basically join us and basically let us know what your thoughts are and ask your questions directly. Okay, so the link is on the screen right now. If I'm able to, additionally, I'm also going to throw that into the actual chat so you guys can take full advantage of that by just pressing the link. Hopefully that way it will just be a little bit easier for you guys to just press the link, jump straight in, and let us know if you guys have got any specific questions you want to share with us on the actual show. So let me go through the questions that have been asked. I know Yogesh has got a question in here. So Yogesh has asked this question. He says, when you apply for remortgages and you're not sure of the current valuation, should you overestimate or be conservative if you are trying to release as much money as possible? So I put that one on the screen as well. So again, I'll just read it out again. When you apply for a remortgage and you're not sure of the current valuation, should you overestimate or be conservative if you are applying or if you are trying to release as much money as possible? So I'll send that over to you, Paul.
There is a school of thought that says, let me overvalue it, and then the surveyor will probably downvalue it a little bit. Let me over egg it. But let me tell you from my experience, surveyors are a funny bunch, and no offense to any surveyors who might be listening. I love to pick up any of my cases. I trust your judgment completely. But the surveyor is so crucial in the process. Now, I think you offend their professional judgment by trying to over egg it. My experience, and if you were a client of mine, I would tell you what you should put down as the value. I will do what the surveyor is going to do, and I will assess. One of my particular skill sets, which is why I've been successful, is knowing how to value something and being pretty accurate with what you're going to get on a capital valuation. If you try and go too high, I've seen situations where the surveyor actually, I think it's a revenge thing because you're trying to take the micro, non-value more than what they should. So the answer to your question is value it correctly. Again, if you were a client of mine, I will tell you what the maximum you can expect to get out of on a remortgage. And as an advisor, we have some scope between lenders and criteria and different methods of maximizing your earnings. So I would say you can get this amount at this rate, and if you did this, you could probably get you to that. This is the maximum. I'll give you a range of what you can get. But overstating valuation doesn't work. In my experience, it doesn't work.
Okay, so that's really powerful. So in the simplistic sense, guys, Paul said it here again. Yogesh, thank you for the great question. You know, overvaluing it in Paul's experience, it doesn't work. Okay, it's not necessarily just because I've overestimated it. Like Paul said at the beginning, the school of thought, they'll kind of slightly downvalue it, and therefore Bob's your uncle. I'll be making a mint on that. It doesn't work like that specifically. And as Paul said, you've got to look at it in a slightly different way. You've got to think about how you're not necessarily insulting the surveyor's intelligence, which is what I'd say, and basically you're making that surveyor understand that you've produced an informed rationale around the valuation. Okay, and you know that's not the easiest thing to do, but what I want to do again is I want to also share one of the things that Paul said, which I think is very, very important. Okay, there's lots of echoing on my side apparently. Well, let's see if we can sort that out in a moment. But yeah, so one of the things Paul said, which I think is really, really important, is if you were one of his clients, that's something that he'll work with you on. Okay, and obviously because Paul owns a financial services association or business, they actually help provide mortgage products for people, which includes remortgaging, etc., etc. So again, connect with Paul, let him know what your kind of needs are, and this is something he potentially could be able to help you on. So again, guys, this is just something to bear in mind. Okay, it can be utilized in terms of the services to help as well. All right, I'm getting a number of messages. Okay, there's feedback. I think Paul may need to use headphones as the feedback is quite bad. All right, guys, thank you ever so much for the heads up. We're going to try and work on that as we're speaking to you. Paul's got his headphones in as we speak. Love that. That was really quick. But guys, we are definitely trying to make sure that we can sort this all out for you to give you the most value. All right, let us know if it's much better, guys. We are trying to make that better for you right now. I've made sure that I'm fully Bluetooth right now, so therefore you shouldn't get any overspill on my side, and with Paul using his headphones now, hopefully you won't get any overspill on his side. So guys, again, thank you ever so much for that. Now, like I said, you know, feel free to join us in the conversation, guys. Use the Skype link, jump in, and you guys can definitely start to ask us any specific questions that you might have live as well. We'd be happy to take your questions live. So guys, feel free to do that. We're happy to work with you on that as well. Now, let me have a quick check, see if there's any other questions. I'll take one more question before we jump over into any callers in tonight. A great question again from Yogesh. Yogesh says, Yogesh's question is, can children be shareholders of a company and still obtain mortgages? If so, what is the maximum percentage they potentially can hold? And I believe what Yogesh is basically saying, for those of you who aren't familiar with, you know, shareholders and stuff like that, he's basically asking, can children, you know, let's say someone who's under the age of 16, be a shareholder in a specific business so that that part of that business actually is owned by them, but side by side with that, are you able as a business to still acquire mortgages? And the reason Yogesh would be asking that is because for many people, if you're under 16, you know, a mortgage lender is going to look at you and their criteria is going to be you're too young to acquire a mortgage. So it's a very interesting question. I think quite a tricky question, but a great question to be asked nonetheless for a real property investor who's thinking about their children and moving forward. So that's the question from Yogesh. Can children be shareholders of a company and still obtain mortgages? If so, what is the maximum percentage they can potentially hold of the business? So again, Paul, we're going to send that one over to you. What's your thoughts in that regard?
First of all, can you hear me still?
I can hear you perfectly. It's actually much better, no echo whatsoever. So go for it.
All right,
guys. Let us know as well. Let us know in the chat if this is better for you.
Yeah, the echo was driving me nuts as well. Okay, so yes, children can be shareholders of the company. Maximum percentage I can't answer. I don't know the answer to that. You'd have to give me the circumstances. Clearly, limited companies are merely a wrapper. So someone's still got to carry the can. And if they're minors, then they can't be, there's personal guarantees to be signed by the parents. But yes, in answer to your question, they can be shareholders. Percentage wise, you'd need to come to me with the specifics and we can investigate that for you.
Powerful. All right, so guys, those of you who are tuned in, Paul's given a very succinct answer to that question, and I think a very valuable answer. The answer is yes, children can be shareholders, but in terms of the percentage of ownership, that's something where you're going to need to get some expert advice. And Paul's also opened up the opportunity and said, look, connect with him and he'll be happy to help you. We've got a number of people who've just jumped in. Great big welcome to all of you who have just jumped in. Again, let us know if you've got any issues with the audio right now, guys. We've got Deborah who's jumped in and said, I'm here. Deborah Sampson. Deborah, welcome. Deborah, let us know if you're new. If you're new, just write the word new. If this is the first time on the Impact Show, or if you've been here before, let us know by just writing the words being here before in the chat. We've got Rex. Rex has jumped in. Rex says, do you have any advice on finding good brokers and property accountants in London? Amazing question. Whilst we have a qualified accountant and also someone who owns a financial services company on the show. So Paul, I'll pass that question to you. Any advice on how to find great people like yourself in the future?
Look, by word of mouth is always good. Obviously, I'm a great advisor, so
agreed.
You'd start with me. I'm sure it would make sense for you to start with me. What I would say is, your advisor, anybody can be a mortgage broker. And I had this conversation with a lady yesterday because I ran a webinar, and she came on the phone to me and she said, can you advise me how I can do this? In fact, it was similar to the question that Yogesh just asked about children and being on the mortgage, etc. I've already got a decision in principle from another broker. So I actually said, well, why are you coming to me? Go and speak to him. Anybody can be a mortgage broker. And I had this conversation with a lady yesterday because I ran
got Yogesh in.
What's happened there?
Yogesh, you're going to have to mute. You're going to have to mute if you've just jumped in the call. Excellent.
So, look, I'm an advisor and I will help you. And that's how we earn our money, certainly. Anybody can be a broker and go and find you. I don't see my job as just going to find you a mortgage and the cheapest rate. You come to me with an issue and I find you a solution. So I'm a solution provider and we charge more than everybody else for that because you're getting so much more value from me. So I will say, yeah, I am an accountant too, but I'm not a practicing accountant. I have a tax advisor myself. What I am is I'm a financial advisor who also is a property investor. I trained as an accountant and that's my background, but that's not what I do day to day. So, I might have been a doctor 10 years ago, but you wouldn't come to me for surgery if I hadn't practiced for 10 years. So that's my accounting background. Sorry, I'm answering a question because I've just seen it pop up in my peripheral.
No, that is powerful. That is powerful.
So, as far as finding a good accountant is concerned, you want to make sure they've got many property clients and understand the property game because everything is about specialisms these days. And that goes back to me being an accountant as well. So, I'm good with investors because I'm an investor myself and we find solutions. So you might come and say, taking Yogesh's example, I want to buy in a limited company where my kids are shareholders. How am I going to do that? And we come up with a solution. This is what you can do. So yeah, that's how I would find that. You want to make sure that the people that you're on your team have the requisite skills and experience and client bank that suits what you're looking for.
That's powerful. I think that's extremely powerful. And it's funny because I'm always banging on about Power Team. And I love the stance you've taken, Paul, where you've said, look, your mortgage broker is not someone who's just going to get your mortgage. And this, again, is part of the problem. I say this all of the time. People do not get taught in school how to invest in property. So as a direct byproduct, people just try to patch things together and think a patchwork pillow is the best way to get a pillow, and it doesn't work like that. The best way is to seek advice, seek counsel, acquire people onto your team who can be of value and of service to you, and utilize them to help you move forward. So Paul, I'm totally with you. You know, again, for those of you who know about some of the resources we've created, Team 10, this is one of the resources I created, which talks about the 10 key players you need in your property power team. And just like Paul said, when you take on a mortgage broker or an accountant, you should not be looking for someone who can just have that technical skill. You should be looking for someone like Paul, who's got experience in actually investing, specifically, preferably as well, in the thing you're investing in. So if you're doing residential investment, you ideally want someone who does residential investment. And like Paul said, you know, the financial products are not what he's doing day to day. That's part of his business, part of his offering. Okay, so guys, you have to think about it more expansively. Now, we got a question that came in. This question is that the Yogesh from Property Elevator TV show? And what I'm going to do to help us answer that question is I'm going to bring Yogesh on. So Yogesh, you can now join us in our call. And if you jump into the call now, Yogesh, as long as you've got the YouTube on mute and the call in your headphones, we shouldn't get any feedback, and we should be able to take your question on the show. So Yogesh, do we have you in now? Let's see if Yogesh is going to jump in now. Excellent. We've got Yogesh inside the call. How you doing, Yogesh? We got you, Yogesh. We can hear you as well. How you doing?
Hey, Yogesh.
All right, Yogesh. If you can, you.
Oh, can you see me, guys? Now,
yes.
Sorry about that earlier. I had no idea.
In, Yogesh.
I clicked that; it would go straight in.
It's
so
all
sorry.
Good. You're all in. So, Yogesh, the question.
I'm good. Thanks for having me on.
You're welcome. The question just came in, Yogesh. Are you?
Hi, Paul. Hi, Samuel.
Hi, Yogesh. Yogesh, can you hear me? Can you hear me clearly? Oh, I think Yogesh is listening to us on Skype.
You hear me, guys? Now, sorry about that. I had no idea. Yogesh. I clicked that; it would go straight in.
Let me sort out Yogesh quickly, guys.
Thanks for having me.
Welcome. The question just came in, Yogesh. Are you?
Hi, Paul. Hi, Samuel.
Hi, Yogesh. Yogesh, can you hear me? Can you hear me clearly?
Yeah, I just turned YouTube off. It's a delay, isn't it?
Perfect. All right, Yogesh, we can hear your YouTube feed. So if you can mute the YouTube, that would be great. Then that way you can just hear us on the call, and that would be perfect. We'll have perfect timing that way. Yeah. So you can still hear me, Yogesh, right? Perfect. Yeah. Excellent. All right. So Yogesh, first and foremost, welcome to the show. Great to have you on again. Every single week that you do tune in, it seems like you ask some very, very powerful and exciting questions, not just for myself to generally answer, and now obviously I can share the platform with Paul, for Paul to answer, but also for the listeners, those people who are trying to learn. And I'm very grateful to know that we've got a question for you now. So hopefully you can answer that question before you ask your question on tonight's show. And the question is, again, it's from Rex Banner. The question is, isn't this the Yogesh from the Property Elevator TV show? So let us know, Yogesh, is that you?
Hi, Rex. Yes, it is me. I was on the TV show, Sky TV show called Property Elevator, where I had to pitch a deal and get some funding from one of the 5 investors. So it's me. I mean, Samuel helped me quite a lot. If you listen to the past episodes of these YouTube channel, you'll notice that I've asked him a few tips and hints about how to succeed in that. So yes, it's me. I'm glad you noticed me. So thanks.
Powerful. That is powerful. Yogesh, look, it's a pleasure to help. For me, it's always a pleasure to work with people who are going to actually take the situation seriously, and when I give advice, they're going to utilize it. So to me, that's what's important. So it's a pleasure for me to be able to have supported you in such a way. And even more so, what was great was to see when you actually was on the Property Elevator show. I think it was Ranjan, but one of the angels actually said you were the first person that every single angel had actually offered you an actual stake, a deal. And that just said to me volumes. That said to me, you know what? Yogesh is not just jumping on the show and asking questions, but he's utilizing this stuff, and that's what makes the difference. So again, I know you thank me, but I thank you as well for really just taking the information and using the information. That's what's important. It's not just about the information being here, it's about people like yourself using it and utilizing it to move forward as well. So everybody should be able to hear Yogesh. Everybody should be able to hear Paul. Yogesh, I'm going to turn it over to you. As I usually do, I'm going to ask you the two questions I usually ask everyone who jumps on the show. Are you happy for the YouTube world to hear the question you're going to ask us on tonight's show? And side by side with that, are you happy for whatever advice, insights, or knowledge that I or Paul shares for the YouTube world to hear what we're going to share with you as well?
Yeah, that's absolutely fine. Thank you.
Excellent.
Yes.
So take it away, Yogesh. What's your question? How can we help you?
You were talking about this before, Paul, but it's about house prices. I know history says that house prices tend to double over 10 years. And I think you're saying that people don't learn from history. I was listening to that. But situation seems a bit different this time in that two things. One is, I don't think in history there's ever been a time where interest rates were zero, effectively. And secondly, I think, I can't remember what the unemployment rates predicted at. I think, wasn't it 10 to 20%, something huge anyway. And again, I think there maybe has been time when that's happened in the past. But for what I remember, house prices, why do you think, or maybe you don't think, do you think house prices will still eventually go up because of all this quantitative easing that's come into the economy? Or yeah, I think it's a bit different to past times. So just wondering, these unique situations, do you think house prices will eventually go up again? That's my question.
Perfect. So again, guys, for those of you who are watching, Yogesh is taking a part of something Paul said earlier, as in look at history, understand prices are always increasing. With that in mind, now just think about it. What do you think is going to happen next? Paul's saying, I think the prices are going up. Yogesh is saying, well, hold on. We've got a little spanner in the work. We've got lowest interest rates ever. We've got unemployment, which is extremely high. Do you really think it's exactly the same as history? And is that a good summary of the question, Yogesh?
Yeah, it's quick question. Can you see my picture or just my sound?
We've got all audio coming through only. We've set it up so only audio comes through. So, because we could end up having about 10, 20 people coming in. All right. So, Paul, I'm going to hand it over to you. Let us know what your thoughts are about what Yogesh has asked.
So let me pick up interest rates as the first thing. So the crash of the early 90s, the late 80s, was due to interest rates being rocketed up to 13, 14, 15%. I was still a baby then and I wasn't in the market, but I remember and I've been told, so I've seen it. That caused a lot of repossessions. Now, the difference, what they've learned from that is rather than pumping up interest rates, they've actually cut rates to zero. So affordability that's actually driven the market up even higher when it shouldn't have done from 2009. They should have really kept rates normalized and let some repossessions happen, and we wouldn't have had a runaway market until now. But by cutting rates, things are still very affordable. So that is why we've not seen the mad rush of repossessions. And what you have to understand as well, the banks have to consider something they call reputational risk. So they don't want to be kicking little Johnny and little Sarah out of their house and their parents because they've lost their jobs and they can't afford their mortgage. So I think the whole process of repossession is going to be quite slow for home. Unemployment is due to rise to 2.5 million, maybe 3 million, which I think is 7.5 or 10%,
close to 10
of 10% unemployment rate. There is a massive drive about reskilling and retooling the economy for things to move forward. This is a natural order of things. We used to have a manufacturing economy, then it moved to financial services. The next one will be digital. Everything adapts. Yeah? So new jobs, new businesses are created out of recessions, and they will soak up the unemployment rate. The time that it might take for that to happen is another story. And I can't tell you house prices will start rising again in X. We are definitely in for a slower period, if no growth, maybe a fall. Now, I've been on the calls with some of the larger lenders, and some of their economic teams are forecasting anywhere from a 5% fall to a 20% fall in house prices, but nobody really knows for sure. Yeah. Now, where the opportunity lies for us as investors is not waiting for prices to fall, but making them fall. And the way that we make them fall is that we only decide what we're going to pay for something, and if that price isn't achievable, you just don't buy it.
That's
yeah. So
go on, Paul. Go on. You finish.
the homeowners that will be able to ride out the storm, and the government support or whatever will come in place. I think the government will keep homeowners in their homes. I think it's us landlords that might be in trouble. They're not going to protect us. If you've got 8, 9, 10, however many properties, and you're overexposed, tough luck. We're going to take your stuff off you. And that's where the smart money will come in and start buying up stuff at 40, 50, 60 pence in the pound. And that's where the opportunity lies. And then when the economy adjusts, as it undoubtedly will, as it always does, the amount of money that they've flooded into the economy will come out in the wash. So they've done all of this. And I got this from Ranjan as well. I heard Ranjan talking about this, where the government's given us all a case of Red Bull, and we're all running around, bounce back loans, stamp duty exemptions, because they're in fear that everybody will just stop spending and the whole economy will grind to a halt. So they've flooded money in. So actually nobody's really feeling it. But when that Red Bull starts to wear off, some people are going to feel it, and some people are going to feel it more than others. And that is where the opportunity lies.
Right. Paul, thank you ever so much. It's like, I'm going to come back to Yogesh on this. I don't want Yogesh to drop off because I think this is a very, very powerful conversation that we're having here right now. And I think it's very relevant and very needed, especially in the current climate that we're actually dealing with. But one of the things I really want to kind of emphasize, now I haven't heard much of Ranjan's content recently in terms of the Red Bull stuff, but I think that's a great analogy. So Ranjan, again, thank you for dropping that. But it's really true. One of the things I say to people all the time, for those of you who've been watching the previous episodes, you need to look behind the mask. Okay, because what's happening right now is there is a mask on our economy, and there has been a mask on the economy since March. So in one of our first episodes, maybe episode 2, episode 3, I spoke about the fact that if you look at the US market, 9 times out of 10, the UK market follows and tracks after the US market. If you look at the US market, there were clear indications that the US economy was in a recession 23rd, 21st of March. And I basically called it on the show, and I said, look, the UK are going to be sharing that we're in a recession. It might be next week, it might be next month, it might be by the end of the year, but it's happening soon. And I shared that not because I can tell the future. It's got nothing to do with that. It's because you can clearly see that if this market follows that market and that market is saying it's recession time, then it's only a matter of time before the UK market says the same. And the problem we have in the UK is we are very, very trusting of tabloid newspapers who we know have lied to us before. And this is why in one of the earlier episodes on the show, I showed 2 news articles, which were both released on the same day, saying very opposite things about the market based on the same metric. And this is what happens again and again and again. So I'm very much in cahoots with what Paul just said, that we currently have an economy that has a blanket, has a mask on it, and that mask is effectively what you were sharing, Ranjan was saying, is the Red Bull. It's the hyperactivity taking place, which is deceiving people from what's really going on. And the question is, are you going to be the real investor to be able to move the curtain and see what's happening behind the curtain? What's happening behind stamp duty, stamp duty holidays, which are for just less than a year and are going to end in March, apparently. What's happening behind that? What's happening behind all of the other things that are taking place? Some of the news articles I've actually got, again, I don't think we're going to have time for them on tonight's show. Maybe they'll come up next week. But it's all around how, you know, the minimum wage has been increased by marginally nothing. All about how a number of the changes that are taking place right now, which actually don't really mean nothing. They're not really significant changes, but they're buzzwords to go out to tell the media we're doing something, and then to deceive people into thinking, oh, the government's got it handled, there's nothing to worry about. And the problem is, again, which we learned from history, when the curtain is removed by the government, if you're not going to move it yourself, you're going to wake up and realize, hold on a minute, I could have bought 2 or 3 properties from those people that were slightly distressed. Okay, and this is what happens. And guys, you know, I learned this early in my property business. You make your money when you buy. You make your money when you buy. So now's the time for you to be out there finding great property deals, finding great opportunities, and engaging with people to make that happen. Yogesh, what are your thoughts in light of what Paul has shared? What are your thoughts? What's, you know, do you see a different perspective from what Paul's shared about, yes, you know, the interest rates are low, but nonetheless, it's these economies, these economical downturns, which convert the whole market into the new market we see, regardless of the micro metrics. What's your thoughts on that, Yogesh?
Yeah, I definitely see some really good points, particularly about lots of money being pumped into the economy. What I particularly when I mentioned about 0% interest rates, effectively, in the last crash, they were about 5 or 6% from what I remember, and then they came down gradually, which means that people could then afford to take bigger chunks of mortgages because the interest rates were lower, their repayments were less, and so therefore prices could creep up a bit because of that. But now they're at 0, they can't go lower. I'm just wondering, you can't cut the mortgage payments every month. That's why I'm thinking they won't go up as much. This is obviously just a fear I've got, but if you have a comment on that, that would be helpful.
Let me share something before I invite Paul in on that. One of the things I'd say, Yogesh, and again, this is just tapping into the historical information. There's multiple ways governments can make changes. Now, because historically we see interest rates were at 16% and then they were pulled down and that helped buyers to buy, that doesn't necessarily mean that's going to be the next tactic. But the key is to look at the historical information and say, okay, well, what happens? The government comes in to help, okay? The government comes in as the rescue pad or as the savior. So for me, one of the things I've seen recently, which I think it alludes to the things I'm talking about in this regard, is where recently we've heard that apparently, and again, we spoke about this a number of episodes ago, key workers are going to be receiving exorbitant discounts in order to buy. Now, again, it's not a change in interest rates, but it's a change which is, again, the government coming as the cavalry trying to make it easier for people to access the market. But again, we've got to ask ourselves the question, are these eases, you know, similar to what Paul said? Are they really just more liquidity being thrown into the market, which is going to come back to bite? But again, Paul, what's your thoughts on that? Do you have any thoughts around what Yogesh has said as well?
So I'm going to, first of all, in 2008, interest rates, or 2009, interest rates came down like a ton of bricks. They didn't come down gradually at all. It went from 5% or 5.5% down to 1% or 0.5%. I can't remember, but it was dramatic how quickly it came down. But as Samuel said, the government has, if we keep it simple, there are 2 ways that the government manipulates the economy. One is fiscal, which is taxes, regulation, and the other is monetary, control of the money supply and interest rates. Now, as you rightly say, they cannot cut rates anymore. And because they hadn't recovered, I could go on this subject for a while, they hadn't recovered from all of the mis-selling of self-cert and all of the bad debt. The banks are still carrying all of that debt, you know, from Northern Rock lending 125% and the mis-selling from 2000, not mis-selling, but the over-exuberant lending from 2003 to 2007 until it all went pop. Now, because they'd cut rates in 2009 to practically nothing, they didn't have that in their toolbox. So you're right. They didn't have that when this recession's come along, or this economic crisis has come along. They didn't have that, so they've had to use their other monetary tool, which is printing money. But the government, interestingly, after 10 years of austerity, magically have pulled the best part of 500-600 billion out of thin air, which has to be paid back. Now, the interesting thing with interest rates, I think we are permanently in a low interest rate environment, because, and I read this somewhere the other day as well, for every 0.1% the base rate increases, it costs the government an extra £1 billion in interest payments per annum. That increases the borrowing requirement. So the government can't afford rates to go up any more than we can. So affordability is here to stay. And even if you'd have asked me 4 or 5 years ago, I would have said the new normal for the base rate is probably going to be 3%. Now, I say we're looking at something close to, 2. We're seeing 10-year fixed rates at 2%, between 2 and 3%. The margin between 2 and 5 year mortgage rates is nothing. They're all under 2%. So you're right, as that's increased prices. So we're not going to get any more interest rate cuts, but we are going to get some more quantitative easing, because the government, whether they know that it works or not, it's all that they've got left. Plus the fiscal stimulus. So stamp duty, they'll come up with something else. The furlough system, this is fiscal. Yep. These are all fiscal stimuluses. The self-employed tax rebates, bounce back loans and C-bills, that's monetary. They're throwing the kitchen sink at the economy. Now, I don't know when it's gonna happen, but history tells us an increase in the money supply only leads to inflation, because without introducing any more goods or services into the economy, if you give people more money, we're all competing for the same goods or services, but with more money. So therefore prices go up. I don't know when. I haven't got a crystal ball. If I did, I wouldn't be here. I'd be sitting on a BJ to 20% of my money. I'll be talking from somewhere nice and sunny and warm. But I think it's inevitable that the prices will increase. Wages will have to increase to go with it. There will be inflation. What I'm talking about here is inflation, whether that's wage inflation or asset inflation. And asset inflation always leads ahead. So we might see some stabilization somewhere, but I stand by what I'm saying. Did I answer the question? Because sometimes I go off on a tangent.
I think you did. You touched on it, but Yogesh, it's your question. Do you feel Paul answered that?
Yeah, I think you both answered that brilliantly well. So just because we can't move with the interest rates, there are other ways that the government can make changes to encourage the prices to go up. And I totally get that. So yeah, very, very helpful. Thank you so much.
Thank you ever so much. Sorry, Paul's got a question for you, I think.
I'm just gonna make one more point. So Samuel mentioned it earlier as well, and it's another one of those old adages like blood on the streets, but you make your money when you buy. So we don't buy on hope that prices are going to go up. When I'm completing on something, I know that I'm already in the money, and if I'm in the money, the market drops off 10%. I've factored that in. I'd be factoring in a 20% fall. It only makes me negotiate harder with the vendor. So you make your money when you buy. So let's not work on hope. That's not what smart money does.
Powerful stuff. Thank you for that, Paul, and thank you again, Yogesh. Yogesh, I'm you know what, I really appreciate that question, because what that question does is it allows us to really share what's really taking place. And what's really taking place, I'll put it this way, is two narratives. Okay, it's the narrative for the masses and the narrative for the informed. And the problem is, if we follow the narrative for the masses, we lose out. And the reason why is because the masses are not going to be doing what they need to do in order to recuperate funds. And as you were sharing, one of the things that really, really hit me, again, Paul spoke about it, Paul kind of eloquently shared on it, all this money, any changes the government's making, throwing money out there in any way, shape, or form, the money has to be recouped. The money will have to come back to them in some way, shape, or form. The money has to be reproduced in some way, shape, or form. You can't just print money, quantitative easing, whatever methodology or format you're using. You can't just make money and think it's just going to work like that. It doesn't work like that. So as a direct byproduct, we've seen in history how this money gets recouped, sometimes with inflation, sometimes hyperinflation, sometimes currencies are wiped out in extreme cases. But the point is, guys, just be aware, okay? Like Paul said, if you know that you make your money on property when you buy, you're not going to kill yourself pandering to an estate agent telling you, oh, it's 100 grand this week, when you know last week it was 80,000. You're not going to do that. You're going to be doing something different. And this is why we teach property sourcing. This is why Paul is a coach and mentor. He supports people to understand you can find these properties in a different way. You can find these properties doing different things, or you can find these properties the same way as everyone else, but go in with a different type of negotiation in order for you to win. So guys, again, this is the stuff you need to keep in your mind. Now look, let me just say this, guys. If you guys are getting value from this content being shared tonight, hit the like button. Press subscribe if you want to be a part of our community so you can keep up to date with all of the content we put out, and press share. We are not going anywhere right now. Just press share. There's people that might even jump in, even if it's for 5 minutes, and get value from this conversation. So hit the share button, share this with your friends, your followers, and your family, and let other people who want to move forward in property get the real nuggets from people who really care. Now, Yogesh, thank you ever so much for being on. Please, please, please jump back into the chat for us on YouTube and give us a star rating for your question and your answer. We really, really appreciate that. Now, for all of you guys who are still watching, please, please, please be aware you can still jump onto tonight's show. Tonight's show is still available for you to jump onto and ask any specific questions that you might have. So feel free to do that. I know there's a few questions in the chat which we'll get to in a moment, but I'm going to throw another question Paul's way before we push forward as well. And that question, Paul, that I wanted to ask you, in light of all of the things Yogesh kind of touched on and a few things we've spoken about, is what would you say is the biggest challenge that you found in your property journey? Because obviously I know, there's a lot of people out there talking about property for a number of years. There's trainers, coaches, whatever you call them. But the reality is a lot of them don't really share about the hard, the grit, the challenge. A lot of them are really happy clappy, if I use that terminology. And I've seen that before, because obviously growing up, my mum used to drag me to church, and you go to some of these churches and a person is just all positive, but doesn't actually tell you, look, one day, things are going to be hard and you need some resilience. So what would you say, Paul, in your property journey from the 90s, investing actively, being an accountant historically, side by side of that, having your own financial services business, stepping into development as well, with all of that experience, with all of that wealth of knowledge, what would you say has been your biggest challenge that you found in your property journey specifically?
My biggest challenge, my biggest personal challenge, or the biggest mindset, is the most important part of this property journey. And I made a mistake in 2008, 9. After I'd done that deal, I'd done a great deal in 2008. But after that, I kind of sat on the sidelines and I thought, this market's going to crash. There's no money about, because I knew there was the banks weren't really lending. There was a liquidity crisis. And my mindset that had got me to where I was at that point changed from one of positive and finding solutions to one of, I don't think I can't do this, or I can't do that. So the most important thing is controlling your mind and your thinking and having that can-do attitude. And the thing with property, like the National Lottery, which I don't play, you've got to be in it 100%. To win it. So if you're sitting on the sidelines, you're not in the game, you're not on the court. I don't know if anyone's done Landmark. They talk about being in the court or being in the stands. Like if you're in the stands watching the game, it's passing you by. You've got to be in it. Now, you have to navigate your way through the choppy waters. It gets a bit riskier and it gets a bit harder, but you've got to be in it. Otherwise, you're doing nothing. It's like the banks. People say the banks don't want to lend. The banks make money by lending. If they don't lend, they're not making 100%. Any money. So what happens in a crisis is they will get a little bit funnier with how they lend, but they still want to lend. It's fundamental part of their business is lending. So the biggest challenge is mindset. You've just got to be in it, and that's something that I had to remind myself of. And to be fair, Samuel helped me with that as well. Appreciate at some point. He came along as a younger guy and says, "Well, Paul."
I remember all the conversations.
Yeah, so it's that's the most challenging part. I mean, you've got to understand that things go wrong. You talk about people being happy clappy and this deal's great and this deal's great. You know, down valuations happen. You know, you're in an auction purchase and the surveyor, you know, down values your property. Time's running out. The bridging company's asking 1,000,001 questions. You've got 2 days left to complete. You've got 2 hours left to complete and it's still not done. You get into your development. You know, you find something in the ground, you're refurbishing a flat, the subfloor's gone, there's damp, you didn't see it, the roof's leaking. Like, if I can swear, shit goes wrong. And it's how you respond to that is what counts. And that's what I've learned over the years. But mindset is been the toughest journey for me, and keeping that
powerful, extremely powerful. It's funny because as you were sharing, you went through that list. And I was just thinking in my head, there's one pause forgotten in that list. You're sitting in the auction room, you win the bid, and you don't have the 10% for the deposit. But guys, that's a private joke. Like I said, me and Paul have had many years of property conversations, engagement. So that there is a thick list of things that, as Paul said, if it can go wrong, it does go wrong. And I've put it on the screen, guys, because I want you to see that. Paul Roberts, mindset is the most important part of this property journey. And it's powerful because as Paul was sharing, he spoke about his 2008 deal, which was a great deal, which after that great deal, he sat on the sidelines. And guys, I really want to dig and jump into this a little bit before I start to ask Paul more about kind of how he can help people and how he can potentially help you move forward. And I learned this years ago. I was probably around 21 years old and I was reading a John Maxwell book. And it said in the book, it said, your most recent success is your biggest enemy to your future success. Okay, now let me tell you this, because all of this conversation on tonight's live show, episode 33, has just reminded me of so many powerful touch points, in the sense that whose narrative are we following? Whose narrative are we believing? Most people believe and follow a specific narrative. But let me tell you something, 9 times out of 10, the mainstream narrative is not, and I'll say it again, is not the narrative for you. It's not the narrative for me. Because when we follow that mainstream narrative, how do I know this? Why do I know this? I know this because I used to work in schools. I used to work in education before I got full-time into property. And when I was working in education, I was feeding our next generation, I was feeding the children the mainstream narrative. So this is why I know exactly what I'm sharing as I say this to you guys. The mainstream narrative is not the narrative for you. It's not the narrative for me. It's the mainstream narrative that has us tied up in lack of opportunity and lack of, I'd use the term loosely, but prosperity, lack of moving forward. Now, where Paul said mindset is the most important part of this property journey, it just straight away reminded me of that John Maxwell quote. And the reason it reminded me of that quote is because many people think they're successful. Many people think they've got it done. Many people think my 6 properties, 8 properties, 11 properties, 12 properties make me an exception to the rule. But what they don't realize is when you put someone in your corner who can work on you, and I say work on you because it is like a surgeon, they can work on your mindset, get into your head and help you get out of your head. That's when everything changes. I remember the other day I was talking to Paul, and Paul reminded me of a quote that I share every now and then, and it's, you can't see the label when you're inside of the bottle. And this is the problem for many people. That's what success will do to you. You can achieve a certain level of success, and because maybe that's more than the people immediately around you, you think you've arrived. But the reality is, like Paul said, you know, I came along, helped Paul with some mindset issues so Paul could move forward, and Paul did bigger deals moving forward from that. But the same thing, Paul does that for other people. Paul comes along, brings people out of their current way of doing things, out of their current mindset, in order to shift them to the next level. And guys, let me assure you, okay, the biggest changes I've had in my life I can always point to a coach. I can always point to an accountability partner. I can always point to someone who's come alongside and seen things differently and helped me to see things the way they do, so I can basically multiply the way I see things, and as a result multiply the results I can get. Now Yogesh has thrown in the chat 20 stars in terms of the response. That's absolutely powerful. I think that's probably the biggest star rating we've ever got. So Paul, you are definitely adding value here tonight. We've got KTR, great to have you on the show, KTR, tonight. She says lots of value here, really appreciate that. Again, always appreciating having you on the show. Guys, again, I'm going to say it again, if you are getting value from this content, hit the like button. It's the easiest thing you can do whilst you're watching YouTube. Just press like. Whilst you press that like button, the YouTube world understands this is valuable content. Side by side with that, if you're not subscribed, get subscribed, and also press the bell notification so you can be up to date with all of the things we are doing on this channel. Impact Properties, guys, this is where creative property investing is given to you on demand. So I want to jump back into this, Paul. Let's just jump into here. All right, so obviously I've mentioned several times, I want to just, let's go down this road. I've mentioned several times that you can help people, you can support people, etc., in terms of coaching, mentoring, and all of those things that you do as well. All right, let's just open that up. Okay, how can you help the people that are actually viewing this content? How can you help them move forward in their property journey? I'm going to ask it in that big, broad, open sense so we can see how that fits with people. And we've got this question that's come through. The question is, if I can put it on the screen, if I can find it again, but it basically said, what is the best way? There you go. What's the best way to contact Paul Roberts? Please, thanks. So after you share kind of how you can help people move forward, also share the best way for people to contact you. I've got a link, so I'll throw that in as well. But yeah, over to you, Paul.
How can I best help people? So the way that I'm viewing it, because I started to pull together a course, but you know that's not really it. I think, and I've been on courses myself, and you're on the course and you're all hyped, and you come off the course, and then what's happening? So I'm not running a course. I'm mentoring people. I'm coaching you, and I'm doing that not over 12 months, but really over 12 weeks. And you need to be in a certain situation and be ready to kind of move now. And I'm gonna hold your hand. I'm really hands-on, because the idea is I want you to get value, and I know the value that I can give you, the knowledge and the methods that I can show you is worth more than what you're going to pay. But I want you at the end of when we're finished working together, you've got something tangible to show. You're either in a deal or you're in a project or you found something and the value far exceeds, what it's cost you to get there. We work on mindset. We look at valuations. We look at how to negotiate. We look at how to identify. And then the back end stuff, managing the process of buying, how to get it done, how to, refurbish, how that works. Do you do it yourself? Everything that I've kind of been doing over the past 20 years, I'm compressing that and giving that to you. If you've watched The Matrix, when Neo gets on and they plug him in and he says, I know Kung Fu. That's how you're gonna feel when you're done. When by the time I'm finished and I've unplugged you, you're gonna be ready to take over the world. And that's how I can help, and that's how I want to help people.
Powerful. All right, that's extremely powerful.
What was the other question? Sorry, I can't even remember.
The next question was
to get hungry.
No, that's all good. The next question was what's the best way to get in touch with you? But what I'm going to do is I'm going to put the link on the screen that people can use if they're actually interested in potentially working with you and moving forward on their property journey. So that link is on the screen. Side by side with that, I'm going to get that link in the chat. So again, you guys can copy paste that into your own web browser into another tab. You can save that. You can press on the link and just basically go through that right now and utilize that in order to start to book a call with Paul to see if there's a good fit first and foremost, but basically to be able to push forward with Paul as well. Anything else you wanted to add on that, Paul, before I shift gears a bit?
So you can contact me on my socials. It's generally Paul Anthony Roberts on Insta, Paul_Anthony_Roberts on Insta. Facebook, you'll find me, same, Paul Anthony Roberts. LinkedIn, hit Samuel up, he'll connect you, or just connect with that link. You can book a call in with me, and we can discuss how we can work together, and if we're the right fit for one another, and how I can help you.
Powerful stuff. All right, guys, so the link is on the screen right now. Okay, we're not taking that down anytime soon. Side by side with that, it's in the chat. It is the last chat message. Now, we've got a few people who have asked questions, so I'm gonna track back, get into some of the questions in the chat as well. Paul, if you need to go at any time, let me know. Okay, Excellent. I've exceeded the 60-minute mark that I usually have on the show, and I'm happy to stay for a little while longer, so I don't mind as well tonight. But in terms of the questions, just to kind of like give people that little bit more value, I want to jump into some of the chat questions as well, so you guys can know that we're here for you. So we had a question that was further up. I think it was around mortgage products. Hopefully I can find it. Let me just track through. Looking forward to tonight's show. Welcome to the show all. Looking forward to the special guest. Looking forward to tonight's show. So grateful I found the link. New. Good evening, everyone. Okay, cool. So here's a question that came in. And when I saw this question, I was like, this will be a good one for us to at least touch base on as well. And this is from Yogesh as well. Can you get mortgages for property held in trust? Okay, can you get mortgages for property held in trust? I don't think this one should take us long to answer, so I'll throw that one out there first.
It depends on the trust. There are many different trusts. It depends on how they're held. Have you transferred the beneficial interest? Is it unencumbered? The answer is yes, but it's not straightforward, and there's a lot of variables on that. But yeah, we can take that offline.
Excellent.
The answer is yes.
So guys, hope you heard that. Take that offline, okay? So get in touch with Paul, use the link that we've put in the chat, and get your questions answered, your more detailed questions answered, definitely. All right, we answered the question earlier about the good accountant and the good broker. Here's another question which came from Rex. Which professionals or firms would be best to consult in terms of legacy planning? Now, again, this is something myself and yourself were talking about the other day as well, Paul. But yeah, where does someone go if they want to start working out how to sort out their legacy?
You need an IFA that specializes in inheritance tax, really, for legacy planning. I can refer you to somebody. I have somebody that I can refer you to, sure, but you're basically asking for somebody who's a specialist in IHT. And the thing is with tax and legacy planning, it's all individual and down to your circumstances, and it depends on what you've got and what you want. But the best bet is to kind of, speak to somebody. But you're looking for an IFA that specializes in IHT. Now, IFAs all do different. Like I said earlier, everybody's got different specialisms. So you're looking for somebody who specializes in that field.
Excellent, powerful answer. And again, guys, really straightforward. If you need these kind of professionals, connect with myself, connect with Paul, and just ask the question. Just say, look, I'm looking for someone who does this. Do you have a connection? Can you do it yourself? All right. Because I think a lot of the time people are surprised how much you can help them with when they just find the right person, the key person. And again, this is one of the reasons I bring you on the show, Paul, because people don't understand how powerful someone with your kind of experience is. And a lot of the time that, someone might even engage you. I've seen this happen time and time again. Someone might engage you as a mortgage broker and never actually ask you questions about tax implications on certain things. Because again, like you were saying earlier, their whole thing is, I need a mortgage, so I need a mortgage broker, rather than them actually realizing, no, I need a problem solver, so therefore let me connect with the right kind of person who can provide a mortgage and also solve some problems for me. So really powerful. We got another question from G, which was Gavin. Gavin says, when next do you think, and again, we've kind of answered this, but I think this is a good way to summarize our question or summarize some of our answers. Gavin says, when next do you think will be the best time to enter the property market for development or rental investments, example, price drops, etc.? What are the signs to start capitalizing? And again, it's funny Gavin asked this question because I feel like we've really answered this in several different ways. But yeah, I'll let you summarize, Paul, and then I'll throw something on there as well.
I still think we're going to have a little bit of a buying frenzy because of the stamp duty window closing. I don't know if anybody remembers when they introduced the surcharge, but from January to March, my God, that would have been a great time to be selling if you're selling, not buying. So definitely April onwards for rental investments, and just because a lot of buyers are just going to, if they don't get it done by March, I think, unless the government introduces something else, and I'm not expecting them to extend the stamp duty holiday because it's going to have to close at some point, but they'll come up with something else in the spring budget, I'm sure, to keep the economy moving.
Keep pouring that Red Bull.
Keep pouring that Red Bull. I would say next year we're going to start to see some withdrawal symptoms. But like I said, you've just got to be in it to win it right now. You've got to be out there looking and understanding what's going on in and around you with certain properties. And if you know how to value things, you'll know whether you're paying too much or too little for something. You've got to factor in all of the other factors that you need to consider: supply, demand, micro and macroeconomics, etc.
Powerful. What I'll add on to Gavin's question, I feel like Paul just basically alluded to it at the end. Guys, Paul said this earlier. I stand by this. I say this all the time. This is why since March, every single week on a Monday at 8 p.m, we've been running a webinar sharing with you how to take advantage in this current climate and win. Guys, don't wait till next week. Don't wait till next month. This is what you should do, because this is the problem for most people. Most people are looking for property the way they've always looked for property. So because of that, they have to wait until the mainstream narrative says, oh, prices are dropping. Now's a great time to buy, for them to start buying. The reality is this: you should be looking for great property deals every single day. You should create channels for great property deals to come to you every single day. And the reason you should do that is because there are great property opportunities every single day if you know how to find great deals. Okay, so guys, this is something people need to bear in mind. Should you wait till which month next year? What are the signs? What are the indicators? I'll give you some indicators. Okay, a husband and a wife have just got divorced. The husband had more assets than he told the wife whilst they were married. He needs to very quickly exit in terms of the financial ramifications of their property dealings before the court exits for him. This guy would be willing to take fire sale prices on certain property. Why? Because of his predicament. Okay, that's just an indication. Is that the whole market? Is the Sun newspaper going to tell us that this guy's out there? No. Okay, it's your own direct marketing and other things that we can help you with, which is going to help you find these people and identify these people. And there's not just that. It's not just about divorce. There are a myriad of people and a myriad of cases where people are in a situation where they want to sell with speed, and you potentially could help them, or I definitely can help them. Last question we're going to take, and then we're going to try and wrap up. It comes from Rex. Rex says, thank you, Rex, being very active on tonight's show. And I believe Rex said that it was their first time. They were new to the show. So welcome to the show, and thank you for being so active. Rex has said they'd like to start investing in HMOs. What resources would you recommend to help make the purchase, development and renting process smoother? So what resources would you recommend in terms of making the process smoother for that person who wants to basically get into purchasing, developing and renting out HMOs? Again, I'll pass that over to you, Paul.
You've got to understand your market and look at your competitors. At the end of the day, everybody, there's nothing new under the sun. So if you're going to get into HMOs, supply and demands, who are you competing against? What are the room rates? You've got to gain some knowledge and understanding of what you're doing. How many are in the area? Is it Article 4? Is the local authority going to give you planning? If it's, everything works. It's just a question of, how well you're doing it compared to somebody else.
Powerful. I'll add to that. Rex also mentioned in the next comment that they're interested in actually investing in South London. What I'll add to that is this: connect with Paul. All right, Paul's already shared his link. He shared how he can help and support people. Paul's mentioned about valuations earlier on. valuations are going to be crucial to buying the right property at the right price to then invest more money to actually convert, or if you want to use the term develop, into a viable HMO product. So connect with Paul, utilize him as a resource. He's a key resource. Side by side with that, we additionally have a 7 best books for your property success resource that we share every couple of weeks as one of our key resources. I might put that up in a moment for you guys to see that as well. But guys, just take full advantage. And guys, if you want the link to the 7 best books, just put in the chat link, write the word link, and we'll throw that up. But guys, again, just connect, take the value, utilize the value, and allow it to help you move forward so you can take full advantage in the current climate. All right, now, as a result of us really going deep into that show, we're not going to have as much time as I thought we was going to have in order to go into some of the news articles, but that's okay, because I'm sure you guys have got tons of value, as you guys have told me in the chat. We've got a few other questions that have just trickled in. Rex says his nephew has a CCJ. Can they get a buy-to-let mortgage? Will it be at a competitive rate, or would you advise that they wait until the CCJ drops off? Or is there another way to get investing now? Now, I'm going to answer that question with there's always another way, even if you're not going to do it the way you mentioned, but there's always another way. Paul, anything you want to add on that in terms of the nephew and the CCJ?
Yeah, we can. Again, we're kind of specialists in the adverse credit world, so it all depends, Rex. I would say connect with me and find out. We'll give you the information so you can make an informed decision on it. Yeah, it depends on what it is and the whole case. There's no black and white answer to that one. But I can help.
Powerful. And I know from personal experience that one of the key areas that Paul's financial services company works with, or people with, is effectively what Paul said, adverse credit. So someone having a CCJ, someone having some kind of financial blips on their record, that is all under the banner of adverse credit. So Rex, let your nephew get in touch with Paul side by side. Obviously, if you're kind of coaching your nephew through the process, you get in touch with Paul as well, and then through means of that engagement, get the information and utilize that to move forward. KTR says some people say valuers are undervaluing on purpose to protect the lenders. What do you think about that?
Sounds like pub talk, and the valuers wouldn't tell us if they were. I mean,
good point.
There is you got to understand that there's uncertainty in the economy, and a valuation is subjective. Now, the person who gives that value, they're on the hook.
Their job's on the line, right? Yeah.
So they're bound to be conservative. If they think there's any reason, they're not going to overvalue it. The market's not rising. We're talking about job losses. All of those things that are in the media is going to, surveyors read that too. It's like, well, I better err on the side of caution, of course. So, yeah, deliberately doing it, it's human nature.
I agree. I totally agree. And I think, what gets hard for some investors like myself, because I've been in this case, when you don't work a traditional 9-to-5 anymore, when you've been investing and you've utilized that investment to walk away from a traditional way of living, you forget very quickly how traditional thinking works. Now, when you have a job, you kind of sing to the tune of your manager. So think about a surveyor from that perspective. And that's exactly what Paul's saying. He's saying, look, the surveyor's reading the news just like you're reading the news. The surveyor's listening to the news just like you're listening to the news. And they're watching the news just like you're watching the news. So when they show up to the property and they think to themselves, oh, there's a crisis, there's a pandemic, there's a this, there's a that, they also know that their job could potentially be at risk if they do the wrong thing. So sometimes it's all about self-preservation, which is why these surveyors are doing what they're doing. So again, guys, just things to think about. Now, with all of that being said, Paul's link is still on the screen. I'm going to keep that on the screen. Guys, what I want you to do is say a great big thank you to Paul for me on behalf of the Impact Show for coming on. Paul has given us X amount of value, stayed on for over 60 minutes. We really appreciate that. Paul, obviously, every conversation we have is always value packed, which again is one of the reasons I wanted to get you on the show. And I took tongue in cheek that quick opportunity when you jumped on the show the other day to say, look, how do you feel about coming on, being our first guest? So it's been fantastic actually having you and also hearing your insights. I'm really looking forward not only to seeing what you're going to be doing, and I guess we can close out with that, with me asking you that question, but not only to see what you're going to be doing going forward, but side by side with the people who, from viewing this, whether live or on the replay, who actually take advantage, jump on the link, book a call with you, and then move forward in their property journey. Because everybody who knows me knows, you know, my background was in education. My passion is seeing people succeed, is seeing people move forward and flourish. So I'm really looking forward to the people you're going to help flourish from this community as a result of them engaging with you. And one of the great things, Rex has thrown in here, just stumbled on this live chat. How can I follow the other things you guys are doing? Rex, the link's in the chat. For you to subscribe to the YouTube channel. You know, our email is on our YouTube channel. Just feel free to get in touch. Like I said, you know, link up with Paul, link up with us. We're here to help you. We want to help the community move forward. So Paul, last question from us for you again is, where are you going next? What's next for you in your property journey? And yeah, we'll let you share from that perspective.
That's great. So look, I'm looking to help more people, you know, directly through the mentoring program. And if anybody's listening to this chat or is live here now or watches it on the replay within the next 7 days and connects with me and is interested in mentoring, then, you know, we're going to be discounting our offering, because I like Samuel's people. They're well versed. As far as my property journey is concerned, I am moving into development. I'm doing more developments. I'm looking for planning gains, and the traditional buy-to-let, for me, I've kind of got enough, and I don't want to do any more of that with all of the regulation and everything coming in. So I'm moving into the development realm, and we've got a few projects on the go at the minute that are sort of pre-planning, some sites that have been identified, and I'm working with a couple of other people. And, you know, that's where I'm looking to do. I'm aiming to, I don't know, let's see, where are we? I'm aiming to do maybe 5 or 6 deals next year. Not, they won't be completed, but certainly be into some deals next year. Certainly one starting development, actually, you know, through planning and spades in the ground, let's say. By next year. If I just plug my mic out.
We're not getting feedback. I think we're good.
Sorry, my headphones came out. So yeah, that's what I'm doing. More development than traditional buy-to-let, but it seems to me a waste for me to not share that knowledge with others and help other people from what I've learned over the past, you know, 20 years.
Really powerful.
So I'm really looking forward to connecting with people and helping you on your journeys. Because you do need, I think, although I think development's the place where to be right now, if you don't own anything, the first step is home ownership. I can help you with that. If you're a homeowner and you're looking to build a portfolio, or you've got one buy-to-let and you want to take that from 1 to 5 to 10, I can help you with that. You know, or if you just need some financial advice to arrange a mortgage, or you've got a difficult situation, complex income, adverse credit, I can help you with that. So connect, let's talk, and move things forward.
Paul Roberts, thank you ever so much for being on the show tonight. We got a number of comments. Thank you both for the value from Rose. We got Mrs. Akan who says so much value, Paul. Thank you both. We got Yogesh who says thank you so much, Paul and Samuel. KTR says thank you, guys. Guys, this is for you. All right, this is for you. We put this on for you. So the least you can do is share it with other people, okay? When you receive something which is a blessing and encouragement to you, let someone else have some of that as well. So feel free to share this content with other people who you know will be it will be of value to as well. Paul, thank you ever so much for tonight. I'm going to keep you behind the scenes if you don't jump off. But for the rest of you guys, first and foremost, what I want to share with you guys, as I mentioned earlier on, go take full advantage of this resource right here. This is the 7 best books for you to move forward in your property investing journey. Link is on the screen, www.impactproperties.co.uk/book list, and the link is also in the description. Side by side with that, I mentioned Paul's link. Paul's link is also in the description of this video. So if you're not watching this live and you're not seeing the live chat, jump in the description of this video. We always put all of the links in the description of the video so you guys can make sure you can take full advantage of the value that we are sharing with you guys. We want you guys to be able to move forward, and the way we make that happen is by giving you guys more and more and more, and it's always usually in the description. Now, in light of all of those things, just before I sign off, I want to encourage you to go and watch this video right here, which is what comes first, property deals or property funds through means of investors. And side by side with that, when you finish watching that, we have a myriad of videos down below in terms of our Q&A strategies in the storm, shows just like this, where you guys have called in, you've sent in your chat questions asking about the property scenario, and we have given you guys value. So without further ado, guys, I am heading out, I'm heading off. It's been a fantastic show. I've got so much joy out of actually sharing the stage with Paul tonight, and I hope you guys utilize that link, connect with Paul, and take full advantage of your property journey moving forward. With all of that being said, I'm Samuel I Can Win. I'm signing out. Happy investing. it.